Hello, this is Kurt Worley, FX strategist and trader coach at fxbootcamp.com. Today is Friday, November 16th, 2012, and the primary purpose of this market alert video is to answer a simple question. What the heck happened to the Japanese yen on Wednesday and Thursday this week? What you now see is a daily chart for the dollar-yen currency pair on the Oanda MT4 trading platform. This chart shows price action since early June. You might have noticed in the upper right-hand portion of this chart, all of the green candles here. A big move up on the dollar-yen on Wednesday and Thursday this week. By the way, it was a Japanese yen sell-off not only against the U.S. dollar, but a yen sell-off against several other major currencies. In fact, I've got a map courtesy of the Financial Times to show this. This map shows major currencies from all around the world and these currencies' performance against the Japanese yen. Bottom line, and this is what this map shows, virtually every single currency shown in this map, featured on this map, gained in value against the Japanese yen. Put another way, the Japanese yen lost in value, declined in value against all these currencies featured on this map from all across the world. So again, broad yen sell-off on Wednesday, specifically Thursday here this week. So what was the catalyst? Well, the dollar-yen did break some key technical levels, specifically sources of resistance in the 80-30 to 80-60 zone. The 80-60 area represented by the horizontal blue line in this chart. That's had some notable influence on price action going back several months. You see the mid-June highs for the dollar-yen there near 80-60. You see the highs from earlier this month near 80-60 as well. We broke above that level, broke above that source of resistance. So part of this is technical, just a technical break above resistance. Also, you can see the downward sloping red line in this chart. That's a trend line connecting a series of lower highs going back some 3.5 years. So we broke a key trend line, we broke a key level of resistance over the course of the past several months. So part of the reason behind at least the latter part of this move up beyond 80-60 was breaking resistance. But the catalyst for the move is what I want to address right now. Now, what got this move started? What got this big rise in the dollar-yen and break the big yen sell-off going? Well, it was the head of Japan's so-called opposing party that really got things going during the discussion in Japan's parliament, namely the Diet, on Wednesday. And I've got his picture here. The head of Japan's Liberal Democratic Party, namely Abe, is currently leading in the country's polls to become the next prime minister, and it looks like the next election in Japan is going to be held on December 16th. On Wednesday, Abe basically called for the Bank of Japan to pursue aggressive monetary easing. Specifically, he wants the central bank to do whatever it takes to achieve 3% inflation in Japan. Now, that's a pretty tall order when you consider Japan's performance, both the central bank and the fiscal authorities, when it comes to inflation or stoking inflation in that country. I've got an inflation chart here as well. Japanese inflation has been woefully lame. Japan has been battling deflation for many years. Let me highlight this with a marker. Here's the zero line. So when prices are broadly declining year over year, you get bars like this. We had a brief bout in early 2008 where prices were broadly rising year over year. But again, prices declining or prices flat year over year has been far too common of late. So again, Abe intent or seemingly intent based on his comments to do to stoke the Bank of Japan to do whatever it takes to get us up to 3% inflation, which, give you some perspective, that's up here. Japan hasn't seen 3% inflation in many years. So a tall order perhaps by the Bank of Japan. But given that Abe is leading in the polls, election coming up on December 16th, market got spooked, Japanese yen sell off. Now, you may be thinking, well, Kurt, that's all fine and good, but I missed that move. I missed the move on the yen cross. The yen cross is rising over the past 3 days. What do I do now? Well, we've got a Bank of Japan meeting next week. I've got a picture of Bank of Japan Governor Shirakawa. There he is. Shirakawa and his fellow board members are meeting on Tuesday, November 20th during the Asian session. Now, although that central bank is largely expected to do no change in policy, we could get some notable price action on the Japanese yen either before or especially after the policy decision announced by that central bank. So when it comes to next week's price action, we do have a holiday shortened trading week in the U.S. with that Thanksgiving holiday on Thursday. However, that Bank of Japan policy meeting could very well attract a lot of attention and can set up opportunities for both Japanese yen bulls and bears alike. So focal point next week certainly will be the Bank of Japan policy meeting.